This trade helped build my confidence because it pays and it is easy to spot when you know what to look for. But I think most traders are completely missing this type of setup. It starts with a weak low. It ends with liquidity getting run. My name is Bai. I've been trading for 2 years. I'm not consistently profitable yet, but I'm building the discipline to get there. And this has quietly been one of my favorite live executions. And today I want to go through that same execution during this backtesting session I took for myself earlier this week. Let's jump into the chart. Here on the 15-minute, we can see that we're bullish. We have a swing low and have broken structure to the upside and created this swing high. While we've started our present New York session here, let's look left at the previous day's activity, which we can see here inside the purple box. Notice this New York session low right here. It fails to move price and close above the weak high that needs to be taken in this bullish trend. That's a problem. In a bullish leg, highs should be taken. When they aren't, that low becomes weak and suggests that liquidity is resting below it. If we zoom in a little bit and put on our Fibonacci retracement tool from the swing high to the swing low, we can see that that weak low is sitting right under the 50% marker, putting us in the discount area of this bullish price leg. To me, that's confluence. So what is the thesis? The thesis is that this weak low gets run. Not maybe, but likely. As we turn our attention back to current day price action, we've marked up the weak low with the green line here. If price can liquidate this green line and give us any indication that it wants to move higher, then we're looking to get into that trade. At 8:30, news event pushes price down, almost past our green marker. But once that volatility passes, price does move down and liquidate our weak low. At this point, we drop down to the 1 minute to see if we get entry confirmation. Here on the 1 minute, we can see the price that took that weak low. What we want to see how buyers react. We can see that price is ranging, telling us that buyers have come in and sellers are starting to stall. This supply zone right here is the last barrier that buyers need to overrun before I'm convinced that there's a shift in order flow. Why this level? It's because of this aggressive move down and this fair value gap has been created. I want to see buyers pass through all of this before I'm convinced of taking any longs. A few minutes later, we get a candle close above our key level, denoted by the blue line. That's our signal that order flow has shifted, and we can jump to the 5 minute for an entry. Here on the 5 minute, I place my entry at this fair value gap. Stops go below the low, and for a take profit, I'm identifying this buy to sell candle that produced that move down to take the weak low initially. I get tagged in almost immediately, and price moves in my favor. By the end of New York session, I'm in profit and almost at my take profit. At this point, that I would move my stops to break even, removing all risk off the table. During after-hour sessions, right before London opens, price hits my final take profit. It turns out to be a clean liquidity sweep, a clean shift, and a pretty nice delivery to my final take profit for a nice 3-hour trade. This setup isn't about the Fibonacci tool, and it's not about the fair value gaps. It started with this. What happens when a level that should break doesn't? That's information. That tells me that there are weak lows and weak highs somewhere to target. I'm learning that those weak lows give you a sense of where price is headed to next. I'm learning to form this thesis in the live markets and then let price validate it or invalidate it. No emotion, just execution. I'm not a guru. I'm just documenting my journey towards consistency using market structure, supply demand, and price action analysis. If you're on the same path, then subscribe and let's keep sharpening our edge together. If breakdowns like this help you see the charts differently, then check out this next video right here and I'll see you there.